Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. So far there has been no pullbacks for the Australian dollar since breaking the 60-day moving average that was around the level of 66.40.45 and seen as a key resistance. So far the market is on track to reach its target at 68 cents as the next challenge looks at 67.70.80 and reassess from there. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, fell from 108.80 to 101.35, and it's on track to eventually reach its objective around 99.5 to 150. From the low of 101.35 marks a fresh 8-month low. Meanwhile, with limited data this week, current momentum may persist for the Australian dollar and for other currencies in terms of bullishness. Meanwhile, the central bank representatives will gather in Jackson Hole, Wyoming for their annual economic symposium on Thursday, with the US Federal Reserve Chairman Jerome Powell speaking on Friday. Presently, most investors expect the Federal Reserve will cut rates by 25 to 50 basis points in September, the first reduction since 2022. Any pullback for the Australian dollar views support around 67.15 to around 66.70.80. But overall, even though we are somewhat overbought, I still feel there is at least another 60 points left on the upside before profit taking comes in around the 68-cent mark. The euro dollar gains further momentum and now reaches 111, its objective, and also a fresh 9-month high. In light of how the market's travelling, there's still plenty of room for the upside and therefore could see further gains onto 112. But that being said, the market needs to break 111.45 to support the upside call. Therefore, traders should closely monitor signals and adjust risk management strategies just in case of any pullback towards the region of 110.45. 3 challenging bearish days for dollar yen is likely to continue on to its fourth and now looks towards the bottom side of the range around the 144 region. I feel though, as the market bears way on, the support could see eventually 142 that was recently stabbed at. Nevertheless, any upside attempts should be limited around 145.80.85, and I feel the market most probably will be a quick sharp downturn like previously seen, as stops may be triggered after the recent attempt to break higher and rejected that trend line at 149. Strong performance when it comes to sterling with the engulfing candle, and before that the inverted hammer gave the bulls much momentum and took the rally on and now reaches its objective, or close to 130.5. I feel the market may stretch on towards that level of 131 figure 40 before profit taking emerges. We are a little bit overbought, but the trend is somewhat bullish in terms of the fact is that we've been here for at least a few days. That should continue on, with any pullback likely to be shallow and support seen around 129.45 to 129.95. Moving on to commodities, following its outstanding performance last week, the precious yellow metal has continued to advance, reaching new heights and exploring uncharted territory. In light of how the market is, I feel there is still further upside potential and could look on towards 2,550 as initial target, and then further on, with many calling now 3,000 as a call to the broader case. Any pullback likely to be shallow, but still continue to adjust your risk management strategies if you are trading spot gold, just in case we do get that pullback to the deeper side around 2,470 to 2,480. But overall, as this pattern strengthens, looks like the market can potentially achieve 2,550 and reassess. Wrapping up with oil, we're into the third consecutive day as the bears continue to weigh on the market and still likely to look towards this bottom side of the range, seen around 68.70 to 69.40. Any upside attempts appears limited, with a cap around 74.20.40. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed the great start to the day.